welcome everyone to my first live streaming session. For those of you who know me, you know that I do live sessions with our Discord members. We have the Zoom recording and then we post that on YouTube. But this is different. Now we're doing the actual live trading via live streaming. So hopefully that will be a lot of fun. Today is our first session, so we're going to talk a little bit about, for those of you that don't know me, a little bit about my program, my system, UOTS system, my spreadsheet, my trading plan. Then we're going to place a trade, take a look at our portfolio, talk a little bit about some other things, and feel free to ask any questions if you might have, and I will do my best to try and let me just do something here to make it easy for me to find. If you put any questions, I'll try and check the chat to try and answer that. Okay, so my I have a system, trading system that I kind of developed out of some different trades that I was trading before, namely 1-2-1 and 1-1-2 and different trades like that. It's basically involves selling naked puts and then in addition to that having some put debit spreads and then have some small hedges when needed and things of that nature. But everything is done so that it's mechanical. I don't really want to be trying to think which way the market is going to go at any given time, and I just assume that it's neutral, it's 50-50, and that makes it very easy to trade. And this is a you can call it passive trading or active investing. It's not if you need adrenaline and you need to trade a lot and you need to trade constantly, then this probably wouldn't be for you. But if you like have a full-time job and you can only trade a little bit, maybe a couple times a week, or if you'd rather be out there playing golf, catching fish or something if you have time, and then just trade occasionally and achieve decent returns, then this might be of interest to you. I'm continuously trying to improve and simplify the strategy. I track everything. I track all the data in a single spreadsheet so that over time I can analyze what worked, what could be improved, what could be done differently. And just to give you an idea, this is the main tab where I track each and every trade. But then in addition to that, I have like a pilot station where I oversee the health of the portfolio, different metrics that I follow, and then make determination and decisions from this page as to what we're going to do next. And I'll talk a little bit about that. And then in addition to that, I have a performance page, and this keeps us this allows us to see the performance over time. I don't do any other trades other than the system, and I do that purposely. I don't really care about diversifying around different strategies and different underlyings or anything like that. But also I want to keep this account dedicated to this strategy so that any ups or downs, any good or bad things can be attributed to the strategy and not an occasional good or bad trade that you might have on the side. So everything is done on this. Let me just go down on this page as far as performance goes. But let me break this down a little bit. First of all, keep in mind that I index my returns, so that makes it very easy to change the account size over time. In other words, to pull money out or add money to the account and still keep the proper accounting for the CAGR, because I know I've seen a lot of people on YouTube, they have spreadsheets where they add money, deduct money, but that's not properly accounted for. So you end up with CAGRs or returns that are not accurate to the actual performance of the strategy. And with my formulas in here, I can be confident that when I add money to the account, it's properly accounted for and it still spits out a proper return. So what I do, I track only once per week. I don't think I need any more granular than that. On Fridays, I take a reading of the portfolio, my netlick, and I take a reading of the SPY, just to keep an eye on the market in general, see how I perform against the market. Now, I think it's important to know that it's not my goal to beat market on any particular short time frame, or any year, or even even longer than that. I'm not trying to beat the market. I'm trying to make a consistent CAGR on my return, and if I do that over time, I will beat the market by default, because market will over time return somewhere in the neighborhood of 10%. And my goal with this is to return 20% CAGR over a longer period of time, and by longer I mean anything over 2 years. So I want to be able to look back over any 2 years plus period and see that my CAGR is over 20. That's my first mandate. And my second mandate is to keep MAR ratio under 1. And what that means basically is simply MAR ratio is a simple measurement that takes the long-term CAGR divided by the maximum drawdown over the same period. So let's say, for example, that your long-term CAGR is 10%, and then your maximum drawdown for that same period is 10% as well, then your CAGR is 1. And market, for example, if you just take S&P, depending on how long of a period you take, but if you include the periods when it went down 50% or so, let's say 2008, and then in the same time returned on average 10% or something, then if you take 10 divided by 50, you get 0.2. So long-term markets MAR ratio is in the neighborhood of 0.2, and our goal is to stay at or above 1. Now, this is not easy, of course, but that's the goal. So that's what we're working on, and this is something that we also track, and we track that right here, and I'll show you right up here. So this pulls the data obviously from the left-hand side right here, and I have it split into 2 sections, and this is because I first started recording everything a little over 2 years ago, 2.13 years ago. And back then I was doing different trades. It wasn't my main strategy, UOTS, but it was similar in nature. So the results would not be drastically different. I would assume, or I would hope it would be better, but it shouldn't be worse than that. So over that period of time, I'm tracking the numbers here. But then since I started purely the UOTS strategy on November 10th on 23, which is 0.67 years ago, I've been tracking the separate metrics here. So one day, once we have over 2 years here, we'll probably be mainly tracking this side with the UOTS strategy, so we have a clear UOTS performance over time. And this is pretty simple. If you take a look here, maximum drawdown for our net lick, and the maximum drawdown for this for SPY, and then the CAGR, or this is the achieved CAGR over time, over that period of time, and then the SPY CAGR, and then we have MAR ratio. So we are at 1.94, which is excellent. This is what we want to have. And then SPY was pretty good as well at 0.92. Obviously, we are better for during this period. But if you just take a look at the UOTS only, the drawdowns are less. It's obviously a shorter time frame, so I'm not putting too much faith into that set of data, because it's too short. But still gives an indication of the way things are going. Obviously, markets going straight up for the most part over this period, so it's to be expected that the CAGR is pretty high, as the strategy is designed to overperform its own benchmark in good times when the market is going straight up or sideways, and then also to potentially underperform when the market has a strong pullback, but that period should last a shorter amount of time. So, and then it should converge at our target CAGR or above. That's the goal. And then we have some simple sheets here. This is from the inception for a little over 2 years. We are here in blue, a little bit ahead of market, and the market is here in the red. And just if you're wondering how these trades came about, you can go and watch. I did all of my trading live. It was recorded, and then it's on the YouTube. You can go to my channel and take a look at some of those trades from before. And then we have here broken into year-to-date for the 2003. So this is the whole year, obviously, in 2004. And we were pretty pretty close to market, just maybe a little bit less variance, but we ended up right about the same. And then this year, 2024, again we are in blue, pretty close to the market. But keep in mind, as we go along, I'm tweaking, I'm adding things and taking away things from the strategy in order to improve it. And I expect this to get even better over time. There are a lot of additions or small tweaks. I'm not making any drastic changes. I wait for data to give me some input based on performance and some analysis, and then I do little tweaks, and then we try them. But it's largely the same strategy as it was when I first started. And if you're interested to see a video about the strategy itself, you can go back on the channel also, and I'll put a link in the description below to take a look at that. Now, keep in mind that the strategy has evolved since then, and there are a lot of little nuances that are different than when I initially set off. But here we go. We have a straight line here. Obviously, today market is down, and that's actually I'm glad to have that for today's stream, so I can show you a little bit different what happens when the market pulls back and what we can do and how I handle that. So we'll talk about that as well. So let me just take a look at the chat to see if there is anything. Okay, so you're not seeing any screen, is that right? Oh, I'm sorry. Well, this is beginner's mistakes, because I was on this page, so I'm gonna have to quickly go back over the first part, which is right here, where I have where I record all the trades. And I'm so sorry about that. This is a little bit embarrassing, but look, we'll get it. We'll get there. Anyhow, this is the page where I record every single trade that I make. It's recorded here, and it's broken into naked puts and then put debit spreads on the right hand side. They're put on at the same time, so they're in the same line, but they're not managed together. They're managed separately. Each has its own parameters. And then here, let me just go back to performance to show you what happens here. So this is what I was talking about, where I record performance, net leaks, SPY performance, then everything is indexed back to 100 to start off, and then when we add money or take money out or anything, that's properly recorded here. And then this is just a week over week change. And then here I was talking about how we track this drawdowns and the CAGR and the MAR ratio, and this is since its inception, a little over 2 years, and then this is just since the UOTS strategy started, and it's a little bit over 6 months, not long enough, but it's promising. And this is the chart for the whole period, for 2 years plus, and this is last year, and then this is this year. And as I said, we hope to improve. So right now we're going very close with the market, but we did some tweaks where now we are able to extract a little bit more value when the market is going up, and that allows us to catch up to the market when it's going up relentlessly like it has been recently. Because normally with these type of trades, it's hard to keep up with the market when it's just going straight up, So let me go and show you a little bit now back to the main page. And this is the main page where we have all the data as far as portfolio metrics and the health of the account, some different ratios that we track. So this is where we make decisions if we should put on another trade, or if we should maybe put some hedges or anything like that. So let's take a quick look at the let me just make sure that so you can guys see the screen now, right? Yeah, okay, very good. Okay, so So let me just go quickly over this, just so you have an idea, and then we can go to platform and talk a little bit more about strategy itself. If you take a look here, this user input is in blue right here, light blue, and this is where we put our goals, our target CAGR. This is 20%. This is a long-term goal, not just something temporary. This is like a long-term CAGR. We don't expect to make 20% every single month. I mean, every year or any specific period. But over time, it should stay over 20%. Estimated premium capture rate. This is used for formulas because we estimate that we're going to keep about 26% of all the premium that we sell. Then we have our stop loss, and then some commissions and some different things here that I don't want to go too much into detail. I want to keep something for the subsequent sessions where we can go a little bit more into detail about all of that. But right now, usually what we do, we start by recording the metrics of the account. So let me just start with that, and to do that we'll take a look here. This is our portfolio delta, theta, buying power, usage, and so on. So 126 and 74. So we just go delta 126 and 74. Then we take a look at the VIX, which is 1481. So it went up slightly, nothing major, a couple of points. Then we'll take a look at our Vega, which is minus 676. We take a look at the buying power, and to do that we go here, we refresh it, and then we check it right here. It's 15%. That sounds pretty low. I know a couple of days ago Tasty had some issues with the buying power measurements, and they were a little bit down. It was showing me 7-8 when I had 16 in reality. So 15, we'll be careful with that number, but we'll take it. And by the way, just so you understand here, this is some SGOV that I keep in with some extra unused cash, just to collect a little bit of interest on that. But I don't care about buying power used for that particular purpose, because this is something I can just easily sell at any given time and get my buying power back. So I'm only concerned with the 15% that shows here for my trades. And if I didn't mention, I only trade the S&P. So with the account my size, I would trade futures, MES and ES potentially. And then with a larger account and portfolio margin account, you can consider doing SPX with either XPS or SPY. So that's an option as well. So we go here and we put our buying power 15, and this is some leverage measurements to keep an eye on how leveraged we are. This is notional divided by net lick, notional exposure. The spreadsheet tracks all of those numbers for us, and right here we can see that we are at 1155, and it's down from a couple days ago because I just closed one set of naked puts a couple hours ago, but I'll talk about that later on. And units at risk, this is another way to measure exposure. It's just a little bit different, but still important to keep an eye on that as well. Let's take a look at the, I know I'm not supposed to show the account. I'll try and delete or mask the account number later on, but we are at 71,408. So 71,408, and that gives us our metrics right here, and it shows our delta, theta, vega as expressed as percentage of the net lick. And we can see that our delta is 0.18, then 1.22 for our theta, 0.95 for vega, buying power 15%, and net lick amount or funds available per each unit of risk. So we're in pretty good shape. Even though the market went down, we are still in a good shape. So we're gonna go ahead and put a trade on. And for today, I'll just put a trade on and maybe talk a little bit about how I go about that, but then in some further sessions we'll go and break down the actual strategy and how we do that. So one thing to note here is the VIX. So with VIX at around 14 and change, almost 15, we are looking somewhere at 11, 12 for delta for our naked put. And this is based on some of my research and analysis on how to best handle the delta based on VIX. And same goes for the long put of the put debit spread. So in our case, we're looking at somewhere here, so somewhere around 25. So 11 to 12 and then somewhere around 25. So if we go here, and again, let me just show you here, our goal roughly is to sell in the neighborhood of 1,000, 1,100 per week in order to keep up with our given metrics and achieve our target CAGR. And I like to split that into two trades. So I do trade a couple times per week roughly. And so somewhere in the neighborhood of 500, 600, 450, 5, 6, doesn't matter. It absolutely doesn't have to be precise. What happens then, depending on how much premium we sold, the spreadsheet will calculate based on all the other input here, will tell us how many days that premium covers and when should our next trade be. And that makes it easy. So we don't have to worry about how much premium we get, so long as it's no more than weekly target premium or 1% of the net lick. And 1% of the net lick rule is because with the 200% stop, getting stopped out at 200% would mean that we basically risk 2% of our net lick for each trade, assuming we are able to get out at 200%. That's sometimes not the case. Sometimes we have to go past the 200%, but generally not too much. So to keep us in line, we don't want to go over 1% with our premium sold, or over 1 week in order to be able to trade at least once per week. So now with that, all of that, we can go to the what do you call it, the platform, and take a look here. So market right now is down 1.38, but as I said, I don't care about that. And one thing you'll notice, I don't really even look at charts, or I don't use any indicators or anything. I will occasionally glance at the chart more for entertainment purposes and to stay informed of where we are, but not to make too many decisions. I don't think I'll be able to predict when a majority of people cannot predict. I'm certain of that. So it's no point of me to even try. So I'll just trade what market gives me. I dance around the market with my trades to try and collect some premium around, and trying to avoid getting hurt too much. Now today we are down $1,000, which is fine. That's, if we were in the market, it would be 1.4, so 70,000. That's roughly what we would be down if we just had straight SPY 100% of our account. But we'll be able to close some trades if in case we go over certain parameters, and then stop that bleeding if necessary. But let's just go and put a trade on. So to start, we'll take a look at the available DTEs, and we like to stay around 90 days. We'll go further out if we have to choose. We go further out with a lower VIX, and maybe not as far out with a higher VIX. So in this particular case, 93 is perfectly fine. So if we go here and take a look at the 12, this is the delta column right here, 11, 12 delta, we can choose either one. We can take a look at the open interest if we want to, but let's just see what we get here, because this is not set in stone. Nothing here has to be exactly precise. So here we would be getting 457, but we said 12 is the delta that would be kind of according to plan, and that will give us 480. That's fine, a little bit less than half the weekly target, but that's fine. So we can go ahead and try to collect full amount. Oftentimes we can't do that, so we have to go replace and then just lower it down just a notch and see if we can get that filled, which we did. And then the next step that we do for our put debit spread will go to around 75 days. Again, it doesn't have to be super precise, but it could be either one of these two. Sometimes some expirations are very busy with put debit spreads, and then you have to choose a different one, but sometimes there is plenty of room there. So let's go to 75 and let's take a look at the what did we say, 25 roughly. And before we go further, let's take a little calculator. I just want to show you how we go about figuring out how much to spend. So we take a look here, 31.75, and we did three naked puts. So what did I say, 31.75 times 3 and then times 5 for the multiplier. 476 is what we collected, and then times 0.2, which is maximum we want to spend for our put debit spread, including commissions for the whole set of naked puts and the put debit spread. So we're doing roughly five contracts, so 2.5 for each. So somewhere in the neighborhood of $12-15. It doesn't have to be precise again. So we want to spend somewhere around $80-85 for purely for the cost of the put debit spread, and we do that with a long strike somewhere around here. So let's see what we can get if we go here 125 wide. We're spending 98. That's a little bit too much, and this is 27 now, so we'll go down back to 25, and this is 90. We can go down to 24, and so this is something we can do. We can definitely do this one. $82. We'll usually have to up the pricing a little bit, but let's go ahead and try to get it like so. And if it doesn't work, we'll just go here, replace this one, try to go here. Sometimes we have to be a little bit patient, but we just closed it now at 16.75. Okay, so now that's it. That's the trade is done, and you'll notice that we sold 3 naked puts, but only purchased 1 put debit spread. That's intentional, and we want to keep the ratio of premium collected and expenditure for the put debit spread at a certain ratio, and the parameters are already set out. And then the idea is that over time, given that under most circumstances naked puts should be closing on average at around 30 days, given that our initial profit target is 60%. So all the calculations are done with a 60% profit target, but the plan allows us to go past that if we are underexposed based on some parameters, and that usually happens when the market is going straight up, and I'll show you that in a second, because we had a couple of trades like that. But let's go first and record these trades so that we have everything in the spreadsheet. So to do that, let's go to UOTS, and then we go down here. This is trade number 83. We did it in MES. Today's date. VIX's opening doesn't have to be super precise. It was 14.8 roughly. We did 12 delta at the opening, and then now we have to double check our things here. So 51.25 is what we did, 51.25, and this was in 93 days, and we got 31.75 for it, and we did 3 of them. So that's on that. And then here again we did put debit spread in MES, and then our strikes 54.50 and 53.25, 54.50 and 53.20. What is it? 25, I think. I'll double check. Let me just make sure. Yeah, 25. And then this was in 75 DTE, and we paid for that. We paid 16.75, and that's it. So that's basically, just to give you an idea, this is basically, that's all the trading that we had to do. Now we can go back and update our things. Since we only do very little trading, we have plenty of time to update and to keep track of everything properly. So let's go right here, and now we'll do these numbers again with new parameters that have changed, because obviously we added a trade on. So 139 and 82. So 139 and 82. What did I do? And then this one is at minus 743. The buying power, it's going to be a little bit higher, so we have to go, we have to go to positions, refresh, 16.7, 16.7 notional. Now it's 1276, and we now have 3.6, and this is counting ES. Even though we're doing trades in MES, this is universal, counts 3.6 ES naked puts. We simply multiply the divide. I'm sorry. We take 10 naked puts for one ES put, and that that's the equivalent. Let me just check the chat. I'm interested in what your why is. What is your reason for wishing to grow this account? What is the reason? What is your reason? I'm not sure if I understand correctly, but my reason is, I guess, like everybody else's, to grow this account. Maybe you're asking for a goal, the final goal. Well, the goal eventually for this one is to get it to somewhere, both with additional contributions to the account and the actual growth of the account, to get it somewhere in the neighborhood of 250, 300,000, and at that point start pulling money out and allocating to different things. For right now, it's just a growth mode. I'm not taking any money out, but at around 300,000 is where I'll probably then maintain that and just take take the profits out and do other things with that. I hope that answers the question. Thanks, Sean. Your P&L year today is 9,000. With just 1 day down and VIX up today, you are down 900 today, which is 10%. Isn't that too much? No, I mean, yeah, it is significant, but it's not unusual. None of this is today. The account going down, it's not realized yet. We're working on that. I mean, those trades are still going on, so I'm not like, it is what it is, I guess. Like, it is pretty large comparing to year-to-date profit, but I'm kind of used to it because it can all come back quickly as well, so like, it is I guess that's the point, that's the answer. But I know maybe I need to elaborate that a little bit more, but let me go back to this and then we'll take a look at the account and see how where we stand. Okay, so now that we fill this out, we can go back and take a look at this underexposed, overexposed here, and this has some formulas in it, obviously, to figure based on my parameters here to say yes or no. And the idea is, I'm looking at the buying power and the VIX. So I want to be under 2.5 times the VIX. So I scale it with the VIX, the portfolio delta, and then minimum funds per naked put, and then maximum full book wipe loss. So I don't want to exceed these parameters or any of these in order to consider myself underexposed. Nothing is wrong if I exceed these parameters. What happens is, once this is no, and keep in mind these numbers are somewhat arbitrary and subject to change based on lots of data and actual performance over time. So I might come back at some point and say, you know what, I'm gonna keep this at two times, maybe do this at some different number, doesn't matter. What I'm saying is this is not set in stone, but I'm testing it with this. And what happens is, if it's not underexposed, I will go back and close, for example, any trades, not any, but one at a time, that achieved their goal of 60% and are ready to be harvested. Because normally I would harvest, let's take a look at one of them. See this one here and this one here, those are naked puts. I would normally harvest this trade at 60%. So anything over that is gravy. So this kind of goes along with this. I don't concern myself at all with the profit and loss. To be honest, even if it's 5,000 here, that's not my concern. I kind of look at it long term, and I figure I will probably make over the long term. I will today, if you break down the numbers and you take, you're gonna make maybe 0.10% per day when you look back over a couple of years. So let's say my account is 70,000, and I know I'm gonna end up making $70 when I look back 2 years from now. So in my mind right now, today, even though I'm down 900, I'm up $70. That's my mentality. I'm up $70 long term, because if I start worrying about single day moves up or down, then today I would be depressed and I would be doing stupid things with the account, and then tomorrow or next week when I'm up 600, 1,000, I would think I'm the smartest guy around, and I would again start doing stupid things, none of which is true. I just made $70 today over the long term, and to support that, I can always take a long-term look at my performance in my chart and see how I'm doing. But one of the tweaks to the original strategy is, before I used to have a stop, automatic stop at 60%. But what I noticed is that I'm leaving money on the table when the market is running up. So I created this over-under exposure to allow myself at the discretion to keep some trades past the 60% if I'm underexposed. So right now I'm not underexposed according to those rules and metrics that I set out. So I'm gonna go ahead and close one of these. So maybe this one, but let me just take a look if, because I have another here. So I just wanna see which one is more up. This one is at 57. So actually no, we go back to the other one that's over 60. Where is it now? There you go. No, there you go. So here we're just gonna go ahead and close the full thing. We're gonna have to pay up probably a little bit, like here 11.25, and just to take a look here, which one was that? So this was September 20th, 48.50, and we closed it for 11.25. So now we go back here, we go to UOTS, and we take a look right here. You see 48. I should have taken the number, the actual trade number, and then just go by that, but I didn't, so I'll just have a look here. So this is September 20th, 48.50, and this one is still open, so this is the one that we closed. And what did I say, 11.75, right? No, 11.25. So we go minus 11.25. We put in today's date, and as you can see here, we still overperformed our initial benchmark of 60%. So I'm happy with that. Even though had I closed it yesterday, it was at 70 something percent, I would have made a little bit extra money. But I'm perfectly fine and happy anytime I'm over 60. So as you can see here, and this was a stop loss right here. So I was down a couple 100% on this one, but and back here it was 60% even. But you see, since the tweak, I'm able to extract a little bit extra premium, and that's good. And now this is all combined with the put debit spreads, which obviously for the most part they're losing money, and that's part of the plan, so that's nothing to be worried about. They're losing money here, but here is a breakdown of final PCR, but that's we'll analyze that a little bit more into detail at some other time. And right now what we want to do is maybe just take a look and see if now that we close this trade, if we are now underexposed or not. Because if we are not, then you know, we would close another trade if we have anything over 60%. If we don't, we wouldn't. And I don't think we do actually. Let me see. Let's take a look real quick. So we have this one here. So we have another one at 64. Okay, so we can take a look, and we're not going to rush into conclusions because, yeah, I know market is down now, but who is to say that tomorrow is not going to be up? I don't know, so I'm not going to try and do that. But let's go ahead and take the metrics. 132.76. Let's do that. 132.76, and Vega is not calculated here, so we're not going to change it right now, just to save a little bit of time. We go back to positions, capital required. Now we refresh it, and we are now at 18. And I'm assuming that this is probably due to bug in Tasty Trade, not us, because we just closed the trade, so our buying power usage should be down, but doesn't matter. We'll just record it at 18, and then notional, and this can unit at 3.3. Oh, see, once we did this, because we had 21,000, we had under, you see, if I go back to 3.6, we were under 20,000, and then once we did this, we're under. So it's a subtle difference, and again, I can't really say that this is by any means a precise amount that we should have for each unit at risk. But for the moment, and I don't want to be changing rules on the fly all the time as I'm trading, I want to do that away from the table, as they would say in poker. I want to do that away from the table and analyze the data and then see if that's the case. So what the metrics are telling me now, that I'm underexposed according to these measures. So I will go ahead and leave this one trade going on, that even though it's over 60%, and then we'll see what happens. If things change, we'll close it later. And then one more thing that I want to do is mark this trade. Trade is 83. So what we're going to do, we're going to call this one group position and PDS 83. We're going to do that, and then we're going to go here and do naked puts 83, so that we know what trades are those. And as you can see in my account, all you have is put debit spreads in MES, and then naked puts in MES, and a little bit of SGOV. We have some money in there to collect a little bit of extra premium, and that's all that's in the account. And I also, it's not needed at the moment, but when the times are right or when it's needed, we can implement some hedges, and mainly I do a zebra trade. We can do a long put, we can harvest some shorts of the put debit spreads, or we can just plain sell a short future and quickly gain some delta if needed. That also depends on the VIX at the moment and some other things, but you know, hedges are generally losing trades. But we did manage to make a little bit of money on this particular zebra here when we lost money on the naked puts on that trade that I showed you earlier. At the same time we closed this zebra and gain a little bit of money back. So that's the idea, to minimize the loss, because the losses are natural part of this, but we want to keep them you know, in check and minimize them when possible, and just keep going. And let's go back to main tab. So we're gonna update this later on if there is anything to be updated, but now if there is any questions, now it would be the time, if anybody has anything. And I know there's a lot more to go, but I just think there's no need to squeeze everything into the first session. I'm just really sorry that I had these issues with the live streaming. It's kind of hard the first time you do it, because you click on something wrong, and I think I'm still having issues with the sound. I didn't hear the beep, when you close the trade. So something I need to work on for the next one. Thank you guys very much. I will, as you can see here, I will be doing a trade most likely on Friday, and then hopefully the stream would work better. And Sean says, would be interested to get your views on the TLT stuff I posted yesterday at some point. Yeah, we can continue with that in the Discord. And by the way, for anybody who's watching, we have a free Discord. Link is in the description. Just come in and join us, and we can chat furthermore. But just as a general answer, I don't care about TLT myself. Long-term bonds are not my cup of tea. I don't like them. I wouldn't invest in them. I don't care about trading them. And for any money, and your question was about the extra money that we keep in the account. Just because we don't use the money, we use the margin, so we always have some extra money. I like to keep them in the SGOV bill or something like that, where there is no drawdowns, and I can quickly sell them to gain back my margin buying power, while collecting a little bit of money, basically for free. Not much, but every little helps. All right, guys, I hope this was good, and I'm looking forward to doing more and answering more questions and going more deep dives into strategy and all of that good stuff. But until then, have a fantastic rest of the day.